Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Thursday, June 15th, 2017, and this is the Daily Report for Gold and Silver. Following information released by the Federal Reserve at the conclusion of this month's FOMC meeting has put some tremendous pressure on the precious metals market, specifically gold, which is trading once again lower on the day. We are now looking at a scenario in which ever since the $1,300 failure occurred a few weeks ago, we have seen a steady decline in gold. Gold currently trading at $12.56 even. Net change down $19.90, a drawdown of 1.5%. That is a little deceiving from yesterday's report because at that point, the market was trading at $12.62. So we're absolutely $6 below the close that we had spoken about in yesterday's trade activity. Low on the day has been $12.5270 and the high $12.6850. Silver also tracking lower on the day, taking a 2.3% drawdown or almost 40 cents per ounce, trading at $16.74. The high $17.06 and the low on the day $16.62. Yesterday's press release detailing what the Fed plans on doing in the very near future, specifically speaking about their program to liquidate assets on their balance sheet, is being absorbed into the market. And as traders digest the magnitude and the scope of this liquidation, the net effects it might have, to me, could be profound. At least for now, we are witnessing lower pricing in the precious metals markets. Net change off almost $20 on the day. Since our last report, when gold was trading at $12.62, we are really looking at about a $6 difference. However, the key to me is not the $6, but it is that on a technical basis, gold prices have now plunged below the 50-day moving average. That to me is significant because we talked about the fact yesterday that our first clear warning sign was the fact that we were now trading below a 38% retracement. And that, of course, is a retracement of this last rally, which took gold pricing from about $12.15 to about $1,300. Based upon that and based upon our technical studies, my target right now is pretty set at $12.46. $12.46 has some key numbers in it. Right now, our 200-day moving average is at $12.43. And the 61.8% retracement sits at $12.46. You can see how they cross right here. Of course, as the market drifts lower, or if the market drifts lower, I should say, this number, meaning the 200-day moving average, would move down with that. But my target right now for a place point in which I believe we could easily see support enter the market does not occur for at least another $10. Another piece of technical evidence that we could experience lower pricing in gold is by looking at a short-term support line, and this support line is simply created from these lows here. It was the second half to this resistance line in which we correctly forecasted a breakout as recently as the third week of May. That's what took gold pricing up to just shy of $1,300 before trading lower. Now, if we extend this support line, the other thing that we can see in the market is that we had a clear break not only through the 50-day moving average, but also through this area of support. Again, traders, we are currently flat with no active trades. I do not believe we will see gold firm at this point unless we have some sort of a event that changes that, political or geopolitical. But that being said, and all things being equal, I believe we could see gold prices head towards the mid 1240 area. 1245 is my current target. In other markets that we look at, I think one of the most significant markets to look at right now is the U.S. dollar index up well over 0.5%, trading at 97.46. Of course, we spoke about our earmarked target for the dollar index, which was 96 on the index. It did go to 96.20 intraday, so effectively has pretty much hit that target as far as I'm concerned. But it is certainly one of the major catalysts to this most recent drawdown, today's drawdown in the precious metals markets. Equities as a whole trading under pressure. Dow Jones Industrial Average is recovering nicely from the intraday lows achieved this morning. 21,359 is the effective close today, off by about 15 points on the day, a nominal change in that index. Standard & Poor's down about 0.2%, 2432. And lastly, the composite index off almost 0.5% at 61.65. Traders, I think the most important market we can focus on in terms of other markets that we follow as they relate to the precious metals, of course, is the dollar index. Tremendous upside move in the dollar index, in which we saw about 0.6% in terms of the gain today. You can see that on this daily chart at the upper end of the screen. That's this large green candle right here. But I have a couple of different technical studies that are really pointing to where we could see the dollar index go to. First, before we go into that, I do want to take a look at a couple of things. First of all, the Williams %R, which is very close to a RSI, you can see how that has popped up now, sitting at negative 52. More importantly, the commodity channel index, you can see a major breakout as it has gone from negative into positive, this being our zero line. And if you recall from previous shows, we talked about the fact that I had really earmarked 96 as a point in which I believed that the dollar would probably fall to before finding some kind of support. Yesterday, in fact, we came very close to meeting that criteria, and I believe we actually have met it, when on an intraday basis, the dollar index went to 96.20. Currently, based upon our Fibonacci retracement, which starts at about 94 up to about 104, puts our first level of resistance at 97.74, and that's our 61.8% retracement. A break above that could take us as high as 99. That is our 50%. And then our 38% retracement, which I'm not really looking at as an achievable number very quickly, would come in at around 100. But we certainly have seen some real dollar strength come into the market today. There's absolutely no doubt, traders, yesterday's conclusion to the FOMC meeting, the press releases, and especially the addendum, that's what we spoke about in the opening letter, which really breaks down the plans that the Fed has to liquidate part of its balance sheet and the pace at which it plans to do that, has certainly shaken up both the financial markets as well as the precious metals markets. The dollar, of course, is going to gain some really strong tailwinds based on the fact that we could see interest rates ratchet up rather quickly, much quicker than originally anticipated. As they get underway with this monthly liquidation, they have a cap on it, but that cap comes at $50 billion per month. That, traders, is a pretty massive liquidation on a regular basis. It's never been done. And so the net result of how it will affect the metals as well as the financial markets is uncertain. What is certain is that this is a technique that has never been used before at such a massive scale, and we need to be not only aware of it, but sensitive to the effects it could have. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.